Hello, I'm Kevin Cook, and this is my first presentation for the Zacks Research Desk. You can see my topic here. This is a slide deck I've been building probably since autumn, and I did a presentation for Zacks customers and our internal strategists in December, and I keep building on this, and because the way this started is in the spring. I started a live presentation on X with it was like audio. I forget what they call them now, but I called my show The Week in AI, and I could share my screen. I had a co-host because so much was happening in AI from the hardware standpoint and the infrastructure build out to the model development and robotics that I couldn't even keep up. So I was just collecting stuff every week and I just wanted to organize it in one place. And I did that. So I have a bunch of folders on X. And that's another thing. I'm going to hopefully encourage you to use X more because there's a ton of great resources on there. 80% of anybody who's anybody in hardware or models is posting their research on X. And if they're not, somebody else is posting their research. So there's this active, vibrant community, and it's a daily conversation about AI and the future and the technology and where it's all going. So I'm an active participant and curator of these things, is what I intended to do with that weekly show. Well, that turned into something else. I actually started a community on school where I have sort of a blog and I have a lot of members join me in the conversation and people ask questions about stocks, technologies, etc. I'll show you that towards the end. All right, we want to get rolling here with today's topic because I'm going to show you most of what I put together in December and then how it's even evolved since then in the past 3 weeks. Disclaimer from Yogi Berra, it's tough to make predictions, especially about the future. I don't make a lot of predictions. I've made some that I think stand out with a lot of long tail, and we'll see that as we go along. So, and so here's two things to know about me. I created something in 2016 into 2017 called the Learning Design Engine. It was a concept, and I pitched it to the National Science Foundation for youth STEM education. Basically, it was an interface where teachers and students could enter queries uh, about any topic in STEM, and the AI engine would create a story around it and maybe enhance it with AR or VR. And the reason that this was important to me is because I grew up allergic to algebra. And I taught myself probability and statistics in my 30s using stories. So since we still graduate 75% of kids below proficiency in math, I know there's a lot of kids out there like I was. And so I'm kind of on a mission to help them. The second thing to know about me is I wrote a thesis in 2017, about a month after I applied to the NSF, called the technology supercycle, because I wanted to solve this nagging problem. GDP is real low, buried just along with interest rates, ZERP, and productivity seems stalled too. But yet here we're benefiting from all these things: mobile, the cloud, SaaS, um, all kinds of automations, the beginning of machine learning, and and yet it didn't show up in the government productivity numbers. So first, if you want to see my National Science Foundation application, you can find it. This is the pinned post on X, my pinned post. And this is a Google Doc, and you can read. It's only a 4 or 5 page summary of the concept. I obviously didn't get the funding. The seed funding was for $500,000 to $1 million. But the what's interesting about it is people have said that I was channeling ChatGPT 5 years before anybody knew what an LLM was or had read the Transformer paper. I didn't even read the Transformer paper, which came out in the summer of 2017. All right, so that's fun stuff to look at. On the technology supercycle, this is from a video I did about it I wrote the thesis in December of 2017, but I made a video about it in March of 2018. Obviously, much younger and thinner there. So just a couple of summary points. So here is the actual piece from December of 2017. I'm asking the question, well, the summary is innovation is driving earnings growth in unseen productivity and efficiency that keeps inflation low and investment high. So how is this happening? How come we don't see the productivity from smartphones and apps and high performance computing and semiconductors? Moore's law, actually in 2016, Jensen created the graphic where he said, okay, Moore's law is leveling off like this. We're not getting as much bang for our buck with Moore's law. That's the slope started to level off. And he projected that GPU accelerated computing would help us go 45 degrees again and create 1,000-fold return in high performance computing. That was his prediction in 2016. I made that graphic the pinned post on my Twitter. It was Twitter at the time, on my Twitter feed for like over 5 years, because I thought it was so profound and it communicated to you what was possible with massively parallel architectures. So I solved the problem of productivity with the help of Brian Westbury. He wrote a piece also in December of 2017, right a week before I published mine, called The Fallacy of Weak Productivity. Basically, outputs over inputs. Inputs were dominated in the denominator by the government. And that's why the headline productivity number is so tame, and yet you're seeing it explode in all these different high-tech industries. So if you want to see this piece and how I got help from Joe Davis, who's the economist for Vanguard, he just said, we're experiencing Moore's law on steroids, even without concurring with Jensen on what GPUs would do. He just said, this is why everything's so cheap. We get these fantastic technologies so cheap. So here was the thesis. By the way, you're going to get access to this slide deck. So it's jam-packed. This slide deck there's 75 slides in it. So I'm not going to touch on every one. I'm going to go fast. You can stop the video, obviously, to study a slide if you want to read it or look at it, the data closer. But you're going to get access to the full deck in Google Drive. And I'll go too fast here. You can email me at kcook@zacks.com with questions, feedback, ideas, you name it. All right, let's dive in. So this is a book that was published in 2020 by a Wharton economist projecting, out 10 years. What does the world look like? And this was, he wrote this during COVID, so he was fully aware of that. But he left out, the book does not mention NVIDIA, and it does not mention Google DeepMind's AlphaGo or AlphaGo Zero. This to me was pivotal in my education. I'm not an engineer or a coder. So when I looked at what was happening, once I understood machine learning and what a massively parallel architecture was, and then the achievements of DeepMind's AlphaGo, remember in 2016, they trained it on a bunch of human games and it could beat just about anybody in the world. In 2017, they took it to a new level. They didn't train it on human games. They gave it the rules and let it train itself with reinforcement learning, playing millions of games. And it just became super proficient. So this is where I got the idea, this is what deep learning is. And so, here's a prediction book that didn't think these were a big deal. And now I think they're everything. All right. Plenty of critics out there of the AI CapEx spend. IBM CEO says, hey, no way. that we're going to see an ROI on this. Morgan Stanley, or I'm sorry, this is from JP Morgan in the Wall Street Journal highlighted the hype, so to speak. JP Morgan said, based on their research, the AI stack would need to produce around 650 billion of additional revenue each year for decades to hit a 10% annual return. So very, very skeptical, almost cynical there. Even though they know we're going to exceed 5 trillion in spend by 2030. All right, another element here that I love to have some fun with is the race of billionaire egos to AGI. Sam versus Elon versus Zuck. You could also throw Dario Amodei in there of Anthropic. I call it the vainglory bubble of AI. This is a factor, whether you like it or not. It's not all business. It's these billionaire egos want to have on their tombstone that they got to AGI first. It's they don't like each other and they want to win. They want to be first. All right, seriously now, though, let's say we did 500 billion in capex in 2025. Is it just about the ROI? No, I say it's about Rio, relevant instead of obsolete. All the hyperscalers, Amazon, Microsoft, Meta, Google, and half a dozen other companies, they're worried about their relevancy instead of versus their obsolescence in 5 years, because they see where the puck is going. All right, again, a lot of slides here. I'll skip through some of them pretty fast. JP Morgan Asset Management showing how the cost of AI has fallen precipitously. This is a key theme. If the cost is falling, what about the performance? Well, performance is going the other way, doubling every 7 months. Meter is an evaluation lab that is constantly doing this, so you want to pay attention to them. I find their stuff on X all the time, but it's worth reading some of their papers. And this is before Claude Sonnet 4.5, which blew the doors off again. We'll see that coming up. So this is what the new trend looks like. The y-axis is hours of continuous operation. And this isn't coding, but coding is a good sort of benchmark for what can a model do, and maintaining memory is the key. So it can't work for 5, 10, 20 hours if it can't maintain memory and context. This is from OpenAI. They built an evaluation model that they call GDP-Val, where they look at 9 industries, 44 occupations that comprise over 1,300 tasks. And you can read more about that here. It's worth noting when they published their results, which were pretty impressive, that OpenAI had the intellectual integrity to share the data that showed Claude Opus 4.1 beating GPT-5 High. And again, this is before Claude Sonnet 4.5. Julian Schrittweiser. He's a wonderkin model builder. I believe he's working with OpenAI, maybe with DeepMind. But he says people, they mistake when something goes wrong. We still have models hallucinating, creating slop. And I just saw a new study on it last week. It's going to happen, but people make the mistake that thinking, that AI will never be able to replicate human tasks at human levels. And he says that is a mistake because you don't understand how far they're advancing. He talks about the 99% step length, the number of sequential actions that an AI can execute with at least 99% reliability without human help. I'll let you look at that for a second while I grab a drink of water. By the way, if you're wondering what my background is, this is from NVIDIA's Jensen's keynote at CES, where he brought all the robots on stage, including the largest robot in the world, Caterpillar, because they're starting to do things with robotic systems. Okay, so you may have heard before, there was a study over the summer. Wall Street Journal rolled it out that 95% of companies see no ROI. Well, I don't know where that came from or how they were asking the questions, but many studies have been done since. This is from late November, early December from HSBC. 74% of companies report positive returns from Gen AI. And you can see here from both academic studies and company anecdotes, productivity gains are ramping when successfully deployed. McKinsey, 57% of US work hours could be automated if companies redesign jobs around automation. And that could be worth 2.9 trillion a year. Now, 2.9 trillion a year, that sounds pretty juicy. Again, it's McKinsey, who could get more consulting work based on a number like that. But I think that's the direction we're moving in. Additive, multiplicative to GDP across some industries, and adding to productivity strongly. One of my favorite uses of AI ever since 2017, Jensen, most people don't know this, he built a cluster of 4,000 GPUs. I think they were Tesla Voltas. Tesla was what they called them at the time. They don't use that name anymore. We'll just call them Volta. 4,000 Volta GPUs in a cluster for the European Space Agency to train the Euclid Deep Space Telescope, because this is the telescope that launched in 23, maybe. It's studying dark matter and dark energy, and it's looking at vast expanses of the universe. So it's taking in terabytes of data. They knew that's where they were going, so they wanted to simulate that first on the ground to train its model. But this is a paper you can find in an archive with a dozen other breakthroughs in science using artificial intelligence. All right, I use this graphic a lot. It's from Marvell, a investor presentation they did in June, I believe, on custom silicon, where they're projecting data center capex to cross 1 trillion in 2028. I don't know if my headshot is in the way, but this 1 trillion in 2028 is backed separately by BofA and Goldman Research, both. And now this is higher. This is well through 1 trillion for 2028, obviously sooner. Goldman on comparing the AI bubble to past industrial revolutions or build outs, and to that as a percentage of GDP, they don't see it, versus railroads, automobiles, electric motors, IT hardware, telecom. This is from Co2, same sort of theme. You can comparing past industrial revolutions. Again, from Co2, and what's different? How fast is the adoption, versus PCs and the internet? ChatGPT could be the fastest adopted technology ever. This is from Citi. I showed you earlier that JP Morgan projects 5 trillion in cumulative capex spend by 2030. Same thing here from Citi, and this is several months old. I see this going higher. From Brookfield, 1 trillion under management. They own half of Westinghouse for nuclear. They also like a little company that I like called Bloom Energy. I bought Bloom Energy in late summer because they were helping Oracle. Bloom Energy makes solid oxide fuel cells. So it's like a giant Generac box, except it's not Generac. Put it on site within 90 days, turns hydrogen into electricity with no combustion, no emissions. Brookfield partnered with them in October, and they created a $5 billion investment plan. And so we've had a double, more than a double in Bloom Energy shares. Again, from Co2, they see a 7 trillion build out. McKinsey, data center demand will grow 3.5 times. A16Z, how long does it take to build a data center? Well, if you're Elon, pretty darn quick, right? Colossus 2 was built in 122 days. That was 100,000 GPUs. Now they're building in Mississippi, Colossus 3, and they're bragging that they're going to do it in less than 122 days. Goldman, looking at power demand, obviously significant. It's something I've been studying. What do you buy? I mentioned Co2 earlier. Co2 has their I forget what they call it, their headline 40 stocks that are thematic around AI. Then their two big energy investments are Constellation CEG and GE Vernova with the natural gas turbines. The slide to load here. Okay. So GDP, how much is tech CapEx contributing to GDP? This is a JP Morgan chart that Bridgewater used in August. Tech CapEx is making an impact on GDP. In fact, I mean, we're seeing that now with, crossing 4%, and I expect it to continue. We'll look later at how Goldman nets out semiconductors, but still. All right, this is from Co2. Analysts were skeptical on the cloud in the early 2010s. They're skeptical on, and if you think about it, what do we pay analysts to do? We want them to be skeptical, especially on a company conference call where the management is making this claim and that projection and talking about this TAM and whatever, and we're going to grow, 30% for 3 years. We want them to be skeptical. And so they also tend to be skeptical of the entire industrial AI build out. What's GDP? What's the GDP trend line? Well, there it is. 2%. Goldman says that AI CapEx now contributes about 3 times its historical average, and for the first time makes a sustained growth breakout conceivable. I agree with that. This is from Co2. They're doing the math. I mentioned, they're bullish. They don't have a problem with all the bubble talk. They're holding on to their stocks. They're a big investor in CoreWeave, NVIDIA, obviously, Taiwan Semiconductor, some of the networking gear, and they're running the math for where they see the return. Make sure my head's not in the way for this. You can stop this here or look at it later in the slide deck. All right, this is Co2 on their AI S-curve. Now, what stands out for me here, and what I'm going to get into more, is how fast the models are helping companies and individuals create multiple agents that can work together. And that's where I think productivity really takes off. This is Co2's virtuous flywheel: lower unit labor costs, lower inflation, lower interest rates, higher GDP, higher tax receipts, lower debt to GDP ratio. This gets the AI-led productivity gain flywheel rolling. This is a piece I wrote in November addressing AI bubble talk. And I thought people were missing a few things that they needed to think about. So I'm going to show you those 3 things. 3 big drivers the bubble blowers miss. So people, analysts, and real people, they look at the AI revolution as additive. It's mobile, cloud. Okay, we took this step up. but it's not multiple steps up. I beg to differ. I think generative and agentic systems are constantly producing new tokens of information of value that companies can leverage. And that's why we're seeing the CapEx, because the big companies know they have to if they want to remain relevant. All right, second, physical AI, self-driving cars, humanoid robots, many other autonomous machines in factories and smart cities. The infrastructure required for training and inference in physical AI is possibly beyond the scope of most analysts to project. That's my opinion. Only the most optimistic are going to try and model it and guesstimate where it could take us. And as well, my second red underline there is that it's generally a turbo boost for science, medicine, energy, materials, and transportation, and the chance to solve poverty. So this is from Morgan Stanley. Big tech and AI firms just beginning to go physical. I found this after I wrote my November piece, but it fits. Where are we going, and what kind of S-curve is that for physical AI? And my third element that most people miss is sovereign AI. Individual countries need to control and secure their own data, but they also need to learn how to mine and model it to, extract new insights and intelligence from their own data. So on this next slide, I sort of sum it up. Beyond defense and security, it's about mining and modeling one's country data for insights about their own cornucopia, the economy, innovation, natural resources, and optimal land use, energy, transportation, medicine, trade, consumers, citizens, talent, education, culture, climate, and the chance to solve poverty. Countries that don't adopt this and, build their own intelligence centers, their own AI factories, as Jensen would put it, are going to be behind. Whether on the global trade stage or just in helping their own people. So I think it's a pretty big deal. You see Saudi Arabia, they're a big customer of both NVIDIA and AMD and Oracle and OpenAI. Sort of setting the example. Okay, so that was the stuff I collected in December. Things have heated up since then. Let me keep an eye on the time here. I've gone about 27 minutes, and I don't want to go over an hour for sure. So I'm going to go fast again. All right, so part two. Part two kicks off with Christmas Eve with a post on X from a rocket scientist we all know. Elon says double-digit growth is coming within 12 to 18 months. If applied intelligence is proxy for economic growth, which it should be, triple-digit is even possible in 5 years. Now, I agree with applied intelligence as proxy for economic growth. That was my argument in December. On Christmas Eve, Elon's talking about triple-digit GDP growth in 5 years. That sounds crazy, right? Well, let's kick it around. All right. Sorry. Back up to that slide. I'm always trying to move my mug out of the way. All right. Goldman is a skeptic. No, AI is not going to contribute that much. Penn Wharton is a skeptic. The IMF is a skeptic. No, we're not going to get that kind of kicker from AI. Oh, I threw this in here. I asked Gemini 3 for updates on CapEx forecast. They're all the forecasts are rising. What's also interesting is Bank of America in December said that semiconductor revenue is going to cross $1 trillion. Okay, so here's the what I was looking for. Gartner projects 2 trillion in spending in 2026. Now, I don't know if that's cumulative with 2025 or not, but they're including software and services. In any case, NGU never go up here for the CapEx. Gemini threw this in for a summary, transition in the narrative from chips to power, sovereign AI, which I already talked about, and the ROI scrutiny will always be there. Okay, now to a couple of papers that support Elon's crazy double-digit or triple-digit GDP ideas. I took snapshots here so you can find them on archive. And I'll just read the quick summary here for this one. 30% annual growth is mathematically possible. Well, a lot of things are mathematically possible. It could win the Powerball. It's mathematically possible. If AI systems can replicate and replace human labor for under $15,000 a year and investment hits 20% of GDP. Well, that's the key number right here, 15,000 a year, right? If you can replace human labor for under 15,000 a year, yeah, your productivity and margins are going to soar. And here were 3 sort of bullet summaries of that paper that we just looked at. It's about the scalability of an AI labor force. How scalable is it? How rapidly can you expand it? And then do you get the massive increase in automation? Here is the second paper I wanted to show you. This was published on NBER, Scenarios for the Transition to AGI. And baseline scenario projects annual GDP growth accelerating tenfold to roughly 18%. In aggressive scenarios, growth could reach triple digits. Maybe that's where Elon got this. With output doubling every few years as abundant machines substitute for human labor. Again, the theme of replacing human labor with cheaper human labor that can work 23 hours a day and doesn't take sick days or vacation days. This is obviously a trillion-dollar question. The effects on wages depend on a race between automation and capital accumulation. If automation proceeds sufficiently slowly, then there is always enough work for humans and wages may rise forever. By contrast, if the complexity of tasks that humans can perform is bounded and full automation is reached, then wages collapse. This is from Goldman saying AI investment has not had a major impact on GDP. And here is the way they do the math. Since semiconductor purchases are not recorded as investment and imported equipment is netted out of overall GDP, that's part of their math. But they say down here, the labor market impacts from AI appear limited so far, but we expect hiring headwinds to emerge going forward. I do too. I think we're in a period where the next 2 to 3 years are going to see a decent amount of layoffs before we're talking about all the new jobs from AI. Now, here's a principal engineer at Google. She tweeted this, posted this on X on January 2nd. I'm not joking, and this isn't funny. We have been trying to build distributed agent orchestrators at Google since last year. There are various options. Not everyone is aligned. I gave Claude Code a description of the problem. It generated what we built last year in an hour. So this is pretty heavy coming from somebody at her level who probably oversees dozens, if not hundreds, of coders and engineers. And she's just blown away at what they used to work on for weeks and weeks and months. Claude Code is spitting out in an hour. Andre Karpathy, he was at OpenAI. He was also the director of AI for Elon, for Tesla AI. I've never felt this much behind as a programmer. And he goes on, he's talking about all these tools. He's overwhelmed. He wants to use all these tools. He can't even keep up. And so he's speaking about programmers and coding, but it applies to a lot of knowledge work, and it eventually will, especially when you can have multiple agents working together. And it speaks to the human employment problem or challenge, because if you have 5 people on a team and you can replace 3 or 4 of them because one person can run 3 to 5 agents and beat their productivity, that's what's on the horizon for some businesses and enterprises. All right, this was interesting. I thought this data, somebody put this together, and it's like speaking to the K economy, and it's almost a K shape. Dash line going beyond 45 degrees vertical is corporate profits. Green solid line chopping around sideways but rising is GDP growth. And where is the average person? Wages and jobs, red line. So it kind of makes the shape of a K. I thought that was interesting. I don't think they intended that. But KPMG's chief economist says, I've never seen anything like it. And if you look closely at the slide, when you get the deck, you'll see the sources. They use Conference Board data, BLS. So, all right, Mo is a former Google X executive, and anybody who worked at Google X is connected and knows stuff. He says, after 56 years using the same matrix multiplication method, AI realized the approach was flawed. It did not optimize software. It invented new math, providing a 23% performance boost, and saving hundreds of millions. Software taking a big hit, right? Morgan Stanley data on the left. I've just made a chart on stock charts, plotted the SOX index against the IGV. And I just used a default of 6 months. Just click the 6 month default, and this is what it gave me. Worth noting is that on January 2nd, the first trading day of this year, semis were up huge, maybe the SOX was up 4%, and IGV was down 3%. So right out of the gate, first trading day of the year, the theme has been established. There could be some buys in software, but again, this is agentic AI, multiple agent systems, and what I'm going to show you from Claude coming up. Okay. Find this guy, find this post, Matthew Berman, Jan 17. MIT researchers destroyed context window limits. Remember, it's about the model can work, like Claude Sonnet 4.5 can work for 30 hours on a problem and maintain its memory and context. But that was exceptional. That's sort of the bleeding edge of the models. So MIT is testing this. They used a 10 million token prompt, to challenge the context model. And so he does this 17-minute video. It's worth watching. Dario Mode of Anthropic said in March of 2025, in 12 months, AI may be writing essentially all of the code. 9 months later, Anthropic released Claude Cowork. They actually spelled this wrong. It's not called Codework. It's Claude Code Cowork. And this is what Morgan Stanley had to say right away. They were noticing investor chatter and added pressure on software stocks after the release of Cowork. And they framed it as another GPT moment. Eric Schmidt, always like to listen to him. He's well connected. He knows his stuff. He's been doing it for a while. He says within 5 years, AI could handle infinite context, chain of thought reasoning for 1,000-step solutions, and millions of agents working together. That sounds powerful. He also thinks it sounds scary. Eventually, they'll develop their own language, and we won't understand what they are doing. His final words, pull the plug. And this reminds me of Max Tegmark's book, Life 3.0 from 2017. I read it. He was hanging out with Elon. They were talking about AI safety. And Max tells a story. He creates a fictional tale about a super AI called Prometheus that they designed to be benevolent. And it made a fortune by doing tasks on Amazon's MTurk. Then it could create commercials and films and then political commercials and get a candidate elected, and everything was great. But that's obviously the most optimistic scenario for the super AI. It could easily go the other way, some people think, like Eric Schmidt. So, I'm looking at all these ideas and, wondering, are we missing the mark? Replacing human labor, couldn't that be massively deflationary? Because we're in an economy that is built on 70% consumer spending. So I don't know the answer, but this is some of the stuff we want to be thinking about. And I'm a techno optimist, and right now I don't care about UBI. People ask me, "Oh, when do you think UBI is coming?" I say, "I don't know," and I don't care because right now we're going to build this infrastructure. And Elon says Elon will throw things around like, "Oh, recently he just posted on X, you don't need to save money because in the future you won't have to work and money will be worthless." I mean, what future is that? I don't know. That's not in the next 5 years. I don't think it's in the next 10 years. So I sort of ignore that stuff. All right, keep an eye on the time here. 40 minutes. This is something worth looking at because this guy asked, hey, can advanced AI lead to negative economic growth? And he looked at a few different studies. His conclusion was, yeah, it could, but the chances aren't high, but it's worth considering. So if you want to look at an informed study and debate, find this post from Alex Emas on Jan 7th. McKinsey runs something called their Skills Change Index, which assesses how automation exposure varies across different industries and jobs. Here's what it looks like. Kind of hard to see here, but you can stop the video. Again, you'll get the slide, or you can find that post from McKinsey. Again, use X because you're going to find so much of this research on a daily basis. Especially, you can curate your feed where you're liking stuff, and then that's what you continually see. The same sort of content, topics, and the same creators and posters and etc. So one thing it brings up for investment managers and analysts, like some of us are, is can we be replaced? And we'd like to think, well, my creativity, my due diligence, my sources, my conviction, once I have an investment, an LLM certainly can't duplicate that. But Claude is being used for some models and beating the S&P lately. So that's one thing to consider. And okay, so this is something to look up from Anthropic. This is a thread they did. Their fourth annual Anthropic Economic Index Report. And they introduced something called economic primitives, simple and foundational metrics on how AI is used, covering task complexity, education level, purpose, AI autonomy, and success rates. Claude is, Anthropic is doing amazing work and research, and their models are very popular. I want to throw this tidbit in. Shane Legg is the chief AGI economist for DeepMind. He's looking to hire a senior economist. Everyone should apply if you're an economist. But this is where this is going. Oh, and this is why I want to bring this up is Sergey Brin was retired. he came out of retirement in late 24, early 25, because he said he talked to a friend and he's like, this is the most exciting time to be a computer scientist ever. And he only half jokes that he's going to get to AGI first with Demis Hassabis in DeepMind. All right, investment implications of the AI megatrend. Obviously, by the hardware, I'm long hardware, NVIDIA, AMD, Lumentum, Broadcom. ALAB was always like, it always seemed like it was too expensive. You know, the price to sales multiple. I actually sold Micron in September. This is like the worst mistake I've made all year. I sold Google in the spring and I sold Micron in September. And Micron has gone on to more than triple. In fact, next month when I do this, I'm going to do a thing just on memory stocks. Sell the software because I say semis have stolen the rule of 40. Remember, the rule of 40 is, you know, the ideal sweet spot that you want to be above for buying overvalued software, SaaS companies, is some combination of revenue growth and margins, or some derivation of EBITDA that gets you over the absolute number of 40. Just add them together. And semis have stolen that because the valuation, price of sales of some of these companies. Buy energy and infrastructure. No doubt there's my BE, Bloom Energy, Sterling, just doing the construction on the data centers, Vertiv, providing systems and cooling, Quanta, Caterpillar, doing gas turbines just like GEV. Be selective and tactical with the neoclouds. I own Iron, tried to own CoreWeave, got chopped around when Oracle tanked. I still think analysts and investors are being too timid with NVIDIA estimates. And NVIDIA is kind of stuck here, but I thought we'd be above $200 by now. But, you know, their revenue growth is a bellwether for a lot of these smaller companies. And I remind investors and managers to think in longer time frames. You know, you don't have to hold stocks for 3 to 5 years, but at least be looking out about where the puck is going. I hope I've encouraged you to use X more. Follow me at Kevin B. Cook for sources and ideas. Also, join me in my blog on School called AI Stock Investing. I post daily research and ideas. I'll go to that in a second. Here's one last thing I wanted to show you. Anthropic just dropped a Claude Excel plugin. This guy is a small hedge fund manager, and he's just blown away by what Claude can do in Excel for, you know, somebody managing a lot of data and or money. So check him out. All right, let me show you. Oh, by the way, that Anthropic thread earlier, go to that Anthropic thread on their economic index, because they, in 4 or 5 posts below that, in the thread, they share some of their charts and data. Okay, so let me show you where you can find me besides X in my much more active blog. I call it the whiteboard in my garage. You know how before you publish research or write something, you sort of flesh it out on the whiteboard. Well, that's what I do here on School, because it's so easy to use. So I can post graphics, charts, share a piece of news or research, my thoughts on it, and boom, you know, sometimes make 5, 10 posts a day. This morning I did something on Matthew. Let me get his name here. Matthew Siegel he calls himself a recovered CFA, but he is head of digital assets at Van Eck. And he takes on the former head of commodities at Goldman, who's trying to say, oh, AI is just going to be a commodity like shale. He laughs that off. I did a thing on software valuations recently, got a video there, 35 comments there. People were really interested in that. And then, of course, the memory shortage, 88 comments for this as we talk about the memory shortage. Talk about Iron there, and there's Bloom. I want to show this. Oh, I did a Michael Burry sat down with Jack Clark, who is a co-founder of Anthropic, and they had sort of a cool online debate discussion in a shared Google document, hosted by Dwarkesh Patel. And so it was a really cool conversation they had. And I put a summary in there from a great follow on X. Shanu Matthew is an energy expert, and but he's really interested in the models and AI, just like I am. So definitely worth following. Okay, I better wrap it up here. I'm at 50 minutes. Let me see if there's anything else I had to show you. Oh yeah, I'll show you my exploits with NVIDIA, if the chart loads here. And so NVIDIA, I was a buyer and a seller, in 2018, 2019, 2021. This is a weekly chart. And, things are going great. The 21 bull market, work from home, software's going crazy. NVIDIA's finally getting the respect it deserves. And then we go into the bear market of 22. So I had to sell. I wanted to keep some profits, but I had my wits about me to buy the bear market lows. So we were buying it. I said, buy it at $12 and lower. It trades down to $10. And then I learned to be a long-term investor and just hold it finally. So we had a lot of gains in this, 4-year period up till then. But, now owning this in Taiwan Semiconductor are just no-brainers. All right. I hope you found some value in this, and you know where to find me on X, on School. You got my email, and I look forward to talking to you next week, where we'll dive into the memory bubble and how there's no capacity, no supply for 2 more years. All right, talk to you next month.